G'day traders, Stacy Burke from Stacy Burke Trading. Just a short recap video on the Euro Yen short and also the low of the month, low of the week opportunity that came on the yen pairs afterwards. So looking at the overall bigger picture, coming back to our weekly template, we have a Friday peak formation, and Monday, as I've mentioned in previous videos, I start the week fresh. It's day one. Day one, and we're in an existing downward move. How do we define a downward move? New lows, lower highs, lower lows, lower highs. However you want to do it, it doesn't really matter. We're in a template that is moving lower, but we're heading into a new week. We have day one down. We have shorts trapped, or not trapped, but in the market at the break of Friday's low. Asia, right off the bat, continues the move down into Tuesday's session. The way that I view the market with this is that the low, what's as the week has started, we have a high of the week, and they've gone down, triggered Friday's low, and gone lower. And what that tells me as we're heading into Tuesday and trending is that the low is not yet in place. So I don't automatically just think short and we're in a trend and we just trend trade. I understand that we are going lower. We're dragging traders lower and lower into the market. As I have mentioned, though, is that when a level is broken, psychologically and technically, that triggers other time frame traders into the market. Daily, 4-hour, hourly, 15-minute, whatever that longer time frame may be. But we know that other time frame traders are in the market as this market continues to move lower. When I'm coming to the screen for the US session, so specifically for a trader who's trading perhaps Asia, or they trade in London, or they trade the US session, for me the process is still the same. If I'm going to trade the London session, I want to know, am I down low? Am I up high? Have they triggered other time frame traders into the market? Have they broken out and reversed, or are they still in the process of moving in a trending direction? As we get further and further away from that break, I've talked about identifying the gap. We know that there are traders in the money at the break of that level. And those other time frame traders are also in the money as this market continues to make lower highs. When a market is moving lower, it's broken the low of Monday, it's moving lower, we're looking for the low to be put in place. We have a low in our 3-hour window. I have talked about the 3-hour highs and lows. The Asian 3-hour high and low is broken in the Europe session. It moves lower. It puts a lower high in place. In that 3-hour window, when we come out of it, we have a low of the London session and a high of the Europe session, which is our new lower high and higher low, lower low of the day. Then the market goes into consolidation. We have peak formations above the double zeros, which are our lower highs now. So my thesis is that double zeros is now potentially a peak formation locked in for a high of the day. Understanding that this is our low not only of the day, but the week and the month, as we have just started a new month. This lower low right here, 2 hours prior, in that middle hour prior to the US session opening, is our gift. That's where the pump begins into our last hour as we head into the US session. The first trade idea is the trade to the low of the day, the week, and the month. What do we need to see that for our thesis to be present for a trade? We want to see an entry confirmed after the market has locked in the double zeros. We have peak formations above that have gone up to 25. They've trapped volume away from the low, up into the numbers. So again, if the market was to collapse, this volume is all caught up in the box, in our 100 pip box, into the numbers. Peak formation in the hour prior to the U.S. session, it breaks down. This is our second gift, because now we have a thesis that the high of the day is locked in inside of our peak formations. We then get our first 15-minute bar printing in the U.S. session 12 candle window, and they proceed to work up into double zeros and into our peak formation before engulfing and locking in our high with our first target, the anchor point of where that pump began. That's our level now for where we can position our size into the market. Once we violate this, and I always draw a line on the first candle that goes vertical, that's my last area right here that I will position anything into the market. Once it breaks through, I'm at break even on all positions. Thesis being, this trader who's long at the low of the day should get a minimum of 25 pips against him, taking us down into that 50 level. We work from double zeros and 50s. Those are our major round numbers. We have volume trapped in the upper quarter of our 100 pip box. This is the style of trade that can collapse. Although we're at the low of the month and the low of the week and the low of the day, this is a high probability collapsing vertical move trend trade. Zero stress, back in line with the original trend, but also with the understanding of locking in the money, because we are now at the low of the month, heading into the middle hour of when the New York session is about to open. Now, interestingly enough, this market, with all of our yen crosses, we're at the low of the day, the low of the month, the low of the week. My main focus is always looking at the main pair of the Japanese yen. We're at the low when the U.S. session begins. So again, they've taken out Monday's low, so we're looking for them. They're working down. We're looking for them to lock the low of the day in place. Traders who have broken out on other time frames, we know they are in the money. We know this market has a high possibility of coming back at least to stop them out at break even. The next thing for traders to be thinking about is time compression, the time of day. We have our vertical move down, taking out the low of the day. Comes back and makes a lower high. One push, two pushes, three pushes into our low of the day, the month, the week. This candle right here, we'll draw a little box on that. This candle right here that engulfs these lower bars is the first candle of the middle hour after three pushes into our low, after stops have been hit at 50 at the beginning of the new hour, for beginning the move back up, not only to get traders who were in the breakout, but also to go back into them, putting them under heat and potentially stopping them out, and now we're back inside. This is a textbook day two reversal trade setup after a capitulation trend trade, 50 pips down and 150 back up. Opportunities are going to be huge this week. Keep it simple, traders. Regardless of which session you're trading in, understand your thesis and your plan of attack going into the market, how you will manage that trade, how you will size into it if it is sizable, how you will execute, how you will manage your break evens, your take profit levels, and then shut it down and get off the screen. Lock it in. Don't give anything back. Keep it simple, traders. Hopefully you got value from this short video. Have a great trading session today, and may the markets go with you.